Hey everybody, it's me, Gregory Mannarino. It is Thursday, January 3rd, 2018. People, we have to talk. I am sorry this video is out a little late. When I tell you this communication device has been exploding for me all day long with regard to the implosion that is about to take place. Look, here's the deal. You no longer have to look for a stock market crash. You're in one. You are in one here. And before I even move forward, and I'm not pointing a finger at anyone specific, all right, because I know some of you, are going to have a flip out. Anyone that is telling you that you should be buying stocks here, well, let me say this. That has got to be the most irresponsible comment out of anyone's mouth in the history of the financial markets. You never tell a person to catch a falling knife. Would you do that? Would you tell anyone, maybe your worst enemy, I don't know, to catch a falling knife? Of course you wouldn't. Of course you wouldn't here. So I don't care what source you might hear it from. I don't care how much you might trust this person. Ignore it, okay? What you should be looking at here, if you've been following my work all these years, nobody knows it better than you, and I am damn proud to say it. It's the bond market. It's imploding, and I want to cover that too. But let's start off with the basics. So stocks got slammed today. The Dow Jones Industrial Average closed, I believe, about 660 points in the negative, pretty much at session lows. And that is what the Confederacy of Dunces wants you to look at. They will not tell you that something pretty epic just happened today, referring to the bond market. I tweeted out an alert. I want people to pay attention to this, and I'm going to talk a little bit further right here and right now. The U.S. 10-year yield today hit 2.55%. Okay. We have a flat yield curve. It's completely flat. But the issue is bigger than that right now. It goes back to something I've been warning about already for quite a while. It's called a credit freeze. Okay, I'm going to talk about that too, but let me back up a moment. The federal funds rate, you know, you hear how the Fed has raised rates. That's what we're talking about. It's the overnight rate, the rate at which institutions, banks, will lend to each other. It's 2.5%. Okay. Now, what I want to bring to your lovely attention is this. This is just so sick. The 2-year, the 3-year, the 5-year, the 7-year, right now, are yielding lower than the federal funds rate. Okay. Now, to me, right now, this is bigger than a 2 to 10 inversion. Okay. Why? Because, again, why would an institution lend out their cash when the overnight rate is actually higher than most of the bond market is yielding right now? So just to put this into perspective for you, this is a pathway to another credit freeze. And let me put that into perspective for you. That means you go to your bank, guess what? No cash. You try to get out of an ATM. You can't do it. Institutions do not lend to each other. Banks shut down. Businesses shut down. I mean, we're talking about Great Depression. And we're there. We're here now. We are in the crash. Right here and right now. I want everyone to be aware of that. Unless something drastic happens. Drastic. Like now. We are staring at another meltdown. I can't stress this enough, people. I can't. Let me put a yet another perspective on this for you and why this time is different than every other time before. Different than the meltdown of 2008. Different than the dot-com bubble. Let's just talk about these two because they're not that long ago. How many of you out here, let's make a little joke, with a show of hands, get your hand up. Let's all participate. Remember this guy. I mean, I've been screaming from rooftops about this. I've explained to you that margin debt, the amount of cash that has been borrowed by individuals and institutions to participate in this financial fantasy charade of a market, is at an all-time record high. What does that mean? People hear these words, they watch the movie Margin Call, but what does it mean? It's very simple. As stocks continue their fall, and that's what I believe is going to... I'm not saying we're going to go straight down, okay? You would expect to see a fall and up, kind of like that pattern, okay? But as this progresses, these individuals, these institutions who have borrowed to participate in this market, well, guess what? The lenders are going to say, hold on a second here, we need to protect our capital. So the borrowers are going to receive a margin call, which means they're going to have to sell assets to cover the call. So look, I mean, this starts a vicious cycle in motion. Stocks have the potential to plummet once margin calls start to be issued. You understand? This is not a hard situation to really put together here, all right? But you need to think about how this is going to affect you. And I'm not just talking about your investments here. If you are stuck on the long side of this market, that is, a general investment plan where you only make cash where the market goes higher, you are in a lot of trouble here. A lot of trouble. And you need to take action. You need to start talking to the right people. And again, I'm going to tell you, yeah, the stock market is interesting and it's kind of spooky to watch what's going on here. But watch the bond market and think about what I just said. I'm not going to repeat it with regard to the federal funds rate, the 10-year yield, the inversion that is going to happen. We are going to get a full-on inversion here. But to me, the fact that most of the bonds right now are paying less than the federal funds rate, that's big. That's very big. If the 10-year yield, and we are on the threshold of that, is paying less than the federal funds rate, well, what do you think? Does that sound good to you? People, think about it. What I would suggest, honestly, to people here, don't leave yourself right now without any cash at all that you can hold in your hand. In the event of a credit freeze, and look, could happen tomorrow. We don't know when this is going to happen here again. We've never been here before, but there's nothing wrong with having a few dollars here in your hand that you don't have to go swipe a machine or go to your bank to get. Keep some cash around here. You understand? In case of a credit freeze. All right? That was the big event that really rocked the markets last time. People don't know this. Most people have no idea because the Federal Reserve, what they did, they stepped in. You remember all that with quantitative easing one that unfroze the credit markets? What are they going to do now? Is the Federal Reserve going to start printing cash out of thin air again? Lower interest rates? People, look. In 2008, sit down for this one. Sit down for what I'm about to tell you, okay? In 2008, that was the solution. That to print cash out of thin air in epic amounts and buy everything in sight, okay? The solution now has become the disease, all right? So if the Federal Reserve were all of a sudden to start, I don't know, because they're already printing cash, how do you think the Federal Reserve keeps rates where they are? How do they keep rates suppressed? By getting into the markets. They can't just say things. So if the Federal Reserve will all of a sudden do what some world leaders want them to do, that is keep rates suppressed, that is continue to print money, well, that's what we've been doing now for over an entire decade, and look where we are. Do you think doing the same exact thing is going to fix the problem? Anyone that thinks that honestly needs to call their doctor. Seriously, I don't care who they are either, whether it's whoever they might be. That's the truth. So what we need to do, people, is understand that this looks to me right now, and unless something dramatic happens, and soon, we are in a full-blown meltdown right now. These are the opening salvos here. And this is about to get much, much worse. You understand? So, watch this video several times. Think about what you might have to do here in the event of yet another credit freeze. In the event of a total meltdown of the stock market. How will that affect you? Understand, there's nothing wrong with preparing for a worst case scenario. You should always have the high ground. You understand? Sun Tzu, The Art of War. You always have to have the high ground. So there's nothing wrong with sitting back and thinking a little bit about what I've explained to you here, what we're witnessing unfold. Look, don't believe anything I am saying. Make your own mind up. Just look in the right spots and ignore anybody that's telling you to buy stocks here. I mean, if you look on, let's say, CNBC today, they're parading out fund managers. They're saying, oh yeah, we're buying stocks here. Understand, they make money no matter what happens to your account. They get paid via a transaction. So look at the source. And even if the source is a lot bigger, loftier, and higher than that, when you hear that coming out of their mouth, that's an act of desperation. You understand? Anyway, look, I really hope I've put a perspective on where we are right now, where we are going. There's no waiting anymore. This is it. We are in a stock market crash. It's here now. And how are you going to deal with it? Look, perhaps, okay, and I've outlined this, and I'm not going to talk about it here. Our president has an opportunity to act right here and right now. Several things that he can do to lessen the pain that is going to come. Whether any of it happens, we will see. I've covered this. I'm not talking about it again. I'm sick of it. So I'm done with that. And so anyway, I guess we can have a little hope that maybe something will change. But if things continue the way they are now, well, you tell me. Should we be following the advice of the Confederacy of Dunces, all of them, who are saying that maybe right now is a good time to buy stocks? Don't look at the yield curve. Don't even think about what I've explained to you with regard to the federal funds rate, the 10-year yield. Will you ever hear that on one of those shows? Oh, absolutely not. They're just going to be all gleeful and try to push their narrative that everything is just fine, exactly like they did right at the top of the market in 2008 and right at the top of the dot-com bubble. So you make up your own decision. Don't listen to anybody else. Don't even listen to me. Make up your own choices, your own decisions. You have a brain. It's time to engage it a little bit. People, look, I love all of you. It's the truth. You know that. And I'm going to ask you to share this video. If it's important, if I've covered something here that maybe people need to listen to and make up their own mind, I would appreciate that. And I would love to see a thumbs up from my team out here. If you're on my team, I'm counting on your thumbs up. I'll count, and I will look later. All right, people, I'll see you in the morning.